All right. So we got some interesting research here on PepsiCo.
Yeah.
And, this Motley Fool article you sent over really has us thinking about, is it a good investment for 2025?
Yeah, especially with all this talk about a potential market downturn.
Exactly.
Right.
And they start off by highlighting PepsiCo's 52 years
Oh, wow.
of raising dividends.
Yeah, that's impressive.
I mean, Dividend King isn't just like a catchy title, right?
No, it means something.
It shows a history of, really delivering value to those shareholders.
Yeah, and that kind of consistency.
Yeah.
That's gold during uncertain economic times.
For sure. For sure.
Investors tend to flock to those dividend kings.
Yeah.
Because they offer that stability,
Right.
when other parts of the market are, all over the place.
Yeah. And what's interesting is that the article mentions that PepsiCo's sales volumes are down.
Oh, really?
But their earnings are still going up.
Okay, so how are they doing that?
Right. That's the big question.
Yeah.
So it seems like they're adapting to consumer behavior
Okay.
in a pretty clever way.
Okay.
So instead of just, pushing through aggressive price increases,
Yeah.
which might alienate customers.
Especially in a tougher economy.
Exactly.
Yeah.
They're offering larger package sizes.
Oh, interesting.
So it's a way to maintain sales and boost earnings, even if the profit margins per unit are slightly lower.
I see. So they're giving people more bang for their buck, basically.
Exactly, which, makes sense
Yeah.
in the current economic climate.
Yeah.
But, it does rely on those consumers continuing to buy those larger packages.
Right.
So is there a risk that this could backfire if spending takes a nosedive?
That's the million-dollar question, isn't it?
Yeah.
I mean, it really highlights, the need to look beyond just the headlines and think about the potential downsides, of any strategy.
For sure.
I mean, if we hit a severe recession,
Right.
even value-oriented packaging might not be enough to get people to buy.
And to really understand their potential in a downturn, in 2025,
Yeah,
we need to look at their product mix, right?
absolutely.
It's not just sugary sodas.
No, they've got a lot more than that.
Right.
Yeah, and that's one of their big strengths, that diversification.
Yeah.
Think about their Quaker Oats brand, for example.
Okay.
During the pandemic, with everyone staying home,
Right.
demand for breakfast cereals and those convenient snacks went way up.
Yeah, yeah.
So even if some of their product categories, struggle,
Yeah.
others might actually benefit
Right.
from those changing consumer habits.
And what about Frito-Lay?
Oh, yeah, good point.
Like, are people really going to give up their chips?
Probably not.
Even when times are tough.
I mean, chips are a comfort food.
Right, exactly.
It's a little indulgence that people hold on to.
Yeah. So maybe that's why Motley Fool is so bullish on their resilience.
Could be. Yeah, their product mix definitely plays a role.
For sure. And don't forget about their global distribution network.
Oh, that's huge.
It's massive.
Yeah.
They're not reliant on just one region.
Right, which helps spread the risk.
Exactly.
Smart move.
And that global reach, it definitely came in handy
Oh, yeah.
during the 2022 downturn.
Yeah.
Remember how major indexes were like plummeting?
Yeah, it was a wild time.
But PepsiCo stock actually went up
Wow.
4%.
Okay. That's got to give investors some confidence.
Right. It's a real world example
Yes.
of, how they can perform when the market gets shaky.
It's definitely a good sign.
Yeah.
But we also have to remember that past performance
Right.
doesn't guarantee future results.
Of course. Of course.
I mean, what worked in 2022
Yep.
might not necessarily work in 2025.
Yeah, that's a good point. There are always new challenges and,
For sure.
unforeseen circumstances.
Absolutely.
But this 2022 example, it does make me wonder,
Yeah.
what specific strategies did they use
Right.
during that downturn
Yeah. What do they do?
to actually achieve that success?
It's worth looking into.
Yeah.
Maybe they doubled down on marketing their value products.
Right.
Or maybe they streamlined their supply chain to cut costs.
Yeah,
It's worth investigating
for sure.
to see if those strategies could work again
Yeah,
in a future downturn.
exactly.
Like a detective story, right?
Yeah.
Trying to figure out how a company navigates these
Mhm.
complex economic situations.
Exactly. And one clue that the Motley Fool article points to is the dividend history.
Yeah.
We touched on it earlier, but 52 years
That's incredible.
of consecutive increases.
You don't see that every day.
It's a big deal.
It really shows a commitment to their shareholder.
Yeah, and with the current yield at 3.5%,
Wow.
which is the highest it's been in 15 years,
Oh, wow.
outside of the 2020 crash.
Yeah.
It's understandable why investors are,
Paying attention.
yeah.
Yeah.
That 3.5% yield is certainly tempting.
But
I'm also thinking about how it stacks up against other Dividend Kings.
Right.
Like, Coca-Cola or Procter & Gamble.
Yeah.
Or even Walmart.
Uh-huh.
Like, how does PepsiCo compare?
Yeah, that's a smart way to look at it.
Yeah.
It's not just about the yield itself,
right,
but how it compares to others in the market.
Exactly.
Like the S&P 500 average yield is only around 1.2%.
Okay.
So PepsiCo is definitely doing better than the average.
Okay, that makes sense. But comparing it to other Dividend Kings
Yes, exactly.
would give us a more
apples to apples view.
Exactly.
It helps us see if PepsiCo's dividend is really exceptional,
right,
or just kind of average for its category.
Okay, so speaking of industry trends,
Yeah.
I'm curious how Motley Fool got to that 7%
Yeah.
projected dividend increase for 2025.
Right. What's the basis for that?
Yeah, what are they basing that on?
Well, the article says their analysis of PepsiCo's earnings projections suggests they can handle that increase. But it would be interesting to dig deeper into their methodology.
Yeah.
Did they factor in any potential economic problems?
Right.
What are they assuming about PepsiCo's future revenue growth?
Exactly. We need to understand the why behind that number.
Yeah.
And, while dividends are important,
for sure,
they're only one piece of the puzzle.
Right.
When you're evaluating a company's value.
100% agree.
So
that brings us to another important metric.
Okay.
The price to earnings ratio, or PE ratio.
The PE ratio, yeah.
You're probably familiar with this, but for our listeners who are newer to investing, the PE ratio tells us how much investors are willing to pay for each dollar of a company's earnings.
Okay, so a higher PE ratio might suggest that investors are more optimistic about the company's future growth.
Yeah, they're expecting big things.
And a lower PE ratio might mean the company is undervalued.
Potentially.
Yeah. Okay.
And the article says that PepsiCo's current PE ratio is 22.6. Okay.
And their forward PE is 18.8.
Right.
Now, that forward PE is based on analysts' estimates of their future earnings.
Okay.
So it gives us a little peek into their potential growth.
I see.
But here's where it gets interesting.
Okay.
Their 10-year median PE is 26.1.
So their current PE ratios are actually lower than their historical average.
That's right.
So that does seem to support the idea that
it does.
They might be undervalued.
It raises that possibility.
Interesting.
And when you combine that with their consistent dividend growth and their potential to do well in a market downturn, it starts to paint a pretty compelling picture.
Yeah, it's like those puzzle pieces are starting to
fit together.
Yeah.
But like we said earlier, we need to look at the whole picture.
Of course.
One article shouldn't be the only thing you base your investments on.
Right.
We need to look at other factors, like their debt levels, their management team.
Any potential risks from regulations?
What about their competition?
Oh, yeah, that's huge.
Yeah. How are they doing against Coca-Cola?
Yeah.
And the other snack food giants?
We need to understand how they're staying ahead of the curve.
Yeah. Are they innovating?
Exactly. Are they investing in new products?
Right.
Expanding into new markets.
Yeah.
All those things could affect their long-term growth.
This reminds me of a time when I thought I had found the perfect stock.
Oh, really?
The numbers looked great. The company had a solid track record. Everyone was talking about it.
Okay. Sounds promising.
But I didn't do enough research on their competition.
Oh, no.
And it turns out they were losing market share like crazy
Ouch.
to this new disruptive company.
Yeah.
And their stock tanked.
That's a tough lesson.
It is.
It's so easy to get caught up in the hype.
Right.
But taking a step back and looking at the big picture, especially the competition, can save you from some big mistakes.
For sure.
It's all about connecting the dots, considering different perspectives and challenging those initial assumptions.
Exactly. And that's what we're hoping you'll take away from this deep dive.
Yeah.
The Motley Fool article makes a good case for PepsiCo, especially if you're looking for stability and potential growth in an uncertain market.
They highlight a lot of good points.
Yeah.
They're diverse products,
right?
Global distribution, consistent dividends, and potentially undervalued stock.
But it's just one piece of the puzzle.
Exactly.
Right? It's a starting point.
Yeah, where you begin your own research.
Right.
What stood out to you from their argument?
Yeah. What questions do you have?
What else do you need to know to make a good decision?
Right.
Imagine it's 2025.
Okay.
And the economy is doing what some analysts predicted.
Right.
A market dip is coming. How do you think PepsiCo will handle that?
Yeah.
Will those larger packages still be popular?
Right.
Will their earnings stay strong enough to keep those dividends growing?
And how will their stock price react?
Yeah. Will their undervalued status bring in new investors?
Right.
Looking for a safe haven?
Or will they get caught in a sell-off?
These are the questions we want you thinking about.
Yeah.
We've explored the information, analyzed the arguments, and highlighted the areas for further research.
So now it's your turn.
Go deeper into their financials.
Right.
Research their competition.
Yeah.
Think about the big economic trends that could affect their performance.
We've given you the tools.
Yeah, we've given you the insights.
To start your own deep dive.
The best knowledge is the knowledge you discover yourself.
So go forth and keep exploring.
We'll be here for your next deep dive.
Ready to unpack another fascinating topic.
Absolutely.
All right, that's it for this one.
Thanks for listening.
We'll catch you next time.
Yeah, it's like we're financial detectives.
I like that.
Uncovering the clues.
Yeah.
To figure out how companies handle the economy.
And one big clue that the Molly Fool article mentions is PepsiCo's dividend history.
Oh, yeah.
We talked about it a bit earlier, but 52 years.
That's a long time.
Of consecutive increases.
It's pretty remarkable.
That's not something you see every day.
No, it really shows their commitment to taking care of their shareholders.
Yeah, and with the current yield at 3.5%.
Wow.
Which is the highest it's been in 15 years.
Really?
Besides, the 2020 crash.
Right.
You can see why investors are
interested.
Yeah.
Definitely.
It's tempting, right? That 3.5%.
It is.
But I'm also thinking about how that compares to other Dividend Kings.
Right. Like, how does it stack up?
Yeah, like Coca-Cola or Procter & Gamble. Even Walmart.
Yeah, those are the big players.
How does PepsiCo measure up?
That's a good point.
Yeah.
It's not just about the yield on its own.
Right.
But how it compares to the rest of the market.
Exactly.
Like the S&P 500, for example.
Yeah.
The average yield there is only around 1.2%. So PepsiCo's definitely doing better than average.
Right, but comparing it to those other Dividend Kings.
Yes.
It gives us
a more direct comparison.
Right. It tells us if PepsiCo is really special or just average for its category.
Okay. And speaking of industry trends.
Yeah.
I'm curious about that 7%.
Right. The projected increase for 2025.
What are they basing that on?
Well, the article mentions their analysis of PepsiCo's earnings.
Okay.
And they say those projections suggest they can support that increase.
Okay. So they're confident in PepsiCo's future earnings.
That's what it seems like.
But did they consider any potential economic headwinds?
Yeah, good question.
What assumptions are they making about PepsiCo's revenue growth?
Right. We need to understand how they got to that number.
Yeah. And dividends are important.
Absolutely.
But they're just one piece of the puzzle.
Right. You got to look at the whole picture.
When we're talking about a company's value.
Exactly.
So that brings us to another key metric.
Okay.
The price to earnings ratio.
The PE ratio. You're probably familiar with it.
Most investors are.
But for our listeners who might be newer to this.
Yeah.
The PE ratio basically tells us how much investors are willing to pay.
For each dollar of earnings.
Right. So a higher PE ratio might suggest that investors are really optimistic.
Exactly. They see a bright future.
About the company's future growth.
Lots of potential.
And a lower PE ratio might indicate that it's undervalued.
Maybe the market's not giving them enough credit.
Right. And the article says that PepsiCo's current PE ratio is 22.6.
Okay.
And their forward PE is 18.8.
All right.
Now, this forward PE is based on estimates of their future earnings.
It gives us a glimpse into what analysts are thinking.
Okay, so looking ahead.
Yeah, peering into the crystal ball a bit.
But here's the interesting part.
What's that?
Their 10-year median PE is 26.1.
So their current ratios are actually lower than their historical average.
Which could mean that
they might be undervalued.
Yeah.
It's a possibility. And when you combine that with their strong dividend history and their potential to perform well in a downturn, it starts to paint a pretty compelling picture.
Yeah, it's like we're putting the pieces of the puzzle together.
Exactly. But like we said before, we got to look at the whole picture.
Of course.
Don't base your decisions on just one article.
No way.
There are other things to consider.
Yeah.
Like their debt, the management team.
Right.
Any potential risks from regulations.
And what about their competition?
Oh, that's a big one.
Yeah, how are they doing against Coca-Cola?
Yeah, and all the other snack food companies.
We need to understand how they're staying ahead of the game.
Are they innovating?
Are they investing in new products?
expanding into new markets.
All those things could affect their long-term growth.
Absolutely. It's all connected.
You know, this whole conversation reminds me of a time
Oh, yeah.
when I thought I had found the perfect stock.
Really?
The numbers looked amazing. The company had a great track record. Okay.
Sounds promising.
Everyone was raving about them.
So what happened?
Well, I didn't do enough research on their competition.
Oh.
Turns out they were losing market share rapidly
Ouch.
to this new disruptive company.
Yeah, sometimes those come out of nowhere.
And my stock tanked.
Oh. That's a tough lesson to learn.
It was.
It's so easy to get caught up in the excitement.
I know.
But taking a step back and looking at the big picture,
Yeah.
especially the competitive landscape,
Yeah.
can save you from some big mistakes.
It's a good reminder
Yeah.
that even when things look good on the surface,
Right.
there's always more to the story.
Absolutely. Got to dig deeper.
We can't just skim the surface, you know?
Way. Got to get into the details.
And that's what we hope you'll take away from this deep dive.
Yeah, think critically.
The Motley Fool article, you know, it presents a strong argument for PepsiCo.
Mm-hmm.
Especially if you're looking for that stability and growth.
Yeah, in an uncertain market.
Exactly.
Oh.
They highlight a lot of positives.
They do.
That diversified product portfolio.
Right, all those different brands.
Their global distribution network.
Reaching every corner of the world.
Consistent dividend growth.
Reliable payout.
And a potentially undervalued stock price.
Could be a bargain.
But it's just one piece of the puzzle.
Exactly, it's a starting point.
Right. It's not the whole story.
No, you got to do your own research.
So what resonated with you from their argument?
What stood out to you?
What questions do you still have?
What else do you need to know?
To make an informed decision.
Yeah, picture this. It's 2025, and the economy is taking a dip like some analysts predicted.
All right, market's going down.
How do you think PepsiCo will handle it?
Yeah, will their strategy still work?
Will people keep buying those larger packages?
And they keep those earnings up.
As dividends growing.
Right, and what about their stock price?
Will it hold steady?
Will it attract new investors?
Seeking safety?
Or will it get swept up in the selling frenzy?
These are the questions we want you to ponder.
We've analyzed the arguments.
Explored the data.
Highlighted what needs more research.
Now it's your turn.
Take the reins.
Dive into those financials.
Research their competitors.
Analyze those economic trends.
We've given you the tools.
The knowledge.
To start your own deep dive.
The best knowledge comes from your own exploration.
So go forth and keep exploring.
We'll be here for your next deep dive.
Ready to tackle another fascinating topic.
Absolutely.
Thanks for joining us.
Until next time.